The Ministry of Commerce says the U.S. has to cancel all new tariffs for an ultimate trade deal. Speaking at a weekly press conference today, the ministry spokesperson said removing tariffs is good for both China and the U.S., as well as the overall global economy. Our next guest says if the deal is happening, even if it's just part one of a three-part pact, there are a handful of sectors which could benefit. Barry James is James Investment Research Portfolio Manager. He's with us now. Barry, it's good to see you.
Hi.
So what groups are you now watching? Because we don't even have part one quite there yet. But what groups are you actually buying yet, or is it still too premature?
We're starting to do some nibbling. There's a lot of uncertainty with China, Iran, impeachment, et cetera, et cetera. So as we look at a trade deal, there are definitely some areas that could really benefit. But it's probably too early to bet on that because things, as they usually are with China, go back up into uncertainty. So if we look at it, financials look pretty good. If there's a trade deal, obviously communications companies would probably benefit, and we also like in the area of kind of non-cyclicals, the Molson Coors company. So those are a couple of the areas. There are plenty more, but it really hasn't changed. The picture hasn't changed just yet.
You also expect financials to have, you're more optimistic about financials and insurance companies than, I mean, we have a mix. We've got people who say stay away, but yesterday we had people, oh, get the financials. Where you stand on this and why?
As we look at the financial sector, it tends to do well under low interest rates, especially if we get the curve returning to a normal position where longer rates are higher than the shorter rates. And that would come about if there were a trade deal. More than likely, we'd see that end of the curve start to go back up. But also low inflation works for their benefit.
Well, and Barry, I guess just thinking about your portfolio in general and what you want to do here, looking over the next couple of years, why worry about trade at all? Because I feel like there's a movement here, there's a potential, it seems to me, that the data may have bottomed in the third quarter. The economy may not be heading into the recession that so many seem to be convinced of back in August. Earnings growth may return in 2020. There are other things, like we can still ignore China, but remain positive, especially on things like financials, which you hear a lot of folks get very excited about.
Yeah, as we look at the situation, we would say that a lot of companies have kind of been held back due to the trade. And if you look at CEOs, the confidence of the Conference Board CEO survey is at the lowest it's been since '09. So if you got that shift, then all of a sudden there'd be a lot more probably capital spending going on, which would affect the industrial area and other areas, cyclical areas in the market. So that's one thing to keep an eye on. But you're right. You have to invest based on where things are today, and the stocks that I like Travelers, Molson Coors, and Verizon, are stocks I would buy whether there was any trade thing going on or not. They're cheap, they have good earnings, and they've been in a nice upward pattern, which we think is something that can continue for a while.
Well, let me bounce what I'm doing off you. I'm long a bunch of semiconductors, and I've been amazed by how much business these companies, Lumentum, Qualcomm, NVIDIA, Qorvo, I mean, we're talking anywhere from 30 to 70% of their business comes from China. I'm buying them. You think I'm too early?
Well,
because some of them are starting to move up.
They are.
And I'm making money, and it feels good.
He's right. Better than not.
I mean, it's just, I'm sorry, it feels good.
Well, I guess it depends on what your goals are, right?
Right.
Whether you want to be more aggressive or whether you want to,
If you want to be, dependent on what happens in the Twitterverse, then I think you're somewhat...
Buy at your own will, or buy at your own risk.
Yeah, buy at your own risk. But there are a lot of good opportunities in the information technology area.
Okay, our parent company obviously is Verizon. You said you would buy. I mean, there's this whole race to 5G. One day you read articles that it's really not happening as fast as people will want in the United States. Then you get the articles most recently, oh, it's happening much faster. So what is it for you? Is it the dividend yield, or is it something else that we don't know about here?
I'm sure you know about it here. Yeah, the dividend yield is above 4%, and you're paying less than half of your earnings out to cover that, so it's going to be paid for a long time. People love their phones. They pick them up 52 times a day on average.
Wow.
And so they're committed to them. Verizon has such a large footprint that they're going to going to keep that very steady. And they make it rain when it comes to money, $18 billion a year in free cash flow.
Barry, it's good to see you. Thanks for coming in. Barry James of James Investment Research. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.